What's going on, everybody? Welcome back to Market Journey, and you know the drill. As of today, we're going to be doing a stock breakdown. But before we get into that, I want to show y'all this, and it's totally off topic. It has nothing to do with the stock market, but really fast. If you are a smoothie fanatic, I highly suggest getting the right stuff to make a smoothie in the morning for breakfast. This morning, I had the most banging smoothie, and it is a great way to start the day. That's all I got to say with that. So on to the next thing. What stock are we going to be talking about? So we're going to be talking about a e-commerce stock based out of China. And there's a couple that probably come to mind when I say that. We're going to be talking about Alibaba, ticker symbol BABA, currently priced in at $209.44. This screenshot was from a little bit earlier. It's probably a little bit more, a little bit less. But either way, $209 at the moment. So if you know anything about this stock, then you know it's been heavily beaten down. And we're going to get into why it's been beaten down so bad. But before we get into that, I want to talk about a couple other things. So currently, as you can see at the top, the market cap of Alibaba is $580 billion. And I just want to say, this is a $1 trillion stock. This is a $1 trillion company, no doubt in my mind whatsoever. So for it to be sitting at $580 billion market cap, that is ridiculous. And if you don't know what a market cap is, it's super simple. So it's every available share on the market times the current price, and that will give you $580 billion. Another thing that I want to talk about really fast is forward PE. So if we look over here, a PE ratio of 17.49, which is insane. And so although these companies aren't necessarily direct competitors, I want to talk about some other companies in that field and where they're currently priced in at as far as a PE ratio. So if we go over here and we look at Amazon, forward PE 51. And I just want to say this really fast. The lower that number is, the cheaper that it's valued. So if you're seeing a 17 forward PE for Alibaba, then you're seeing a 51 forward PE for Amazon. Amazon is priced in a little bit more rich than Alibaba. Another big one is Shopify, a 305 PE ratio. I mean, that's just ridiculous. So when you think about it, when you come back at Alibaba and you see a 17 forward PE, that's a little weird. You know, that's definitely weird. All-time highs for this stock is $319. Why in the world is this stock $209? Especially considering if we come over here and we look at the revenue, 2018, Alibaba had $250 billion in revenue. And just look at that growth. It's a steady incline. 2018, $250 billion. 2021, and this is just a fiscal year of 2021. I'm pretty sure this is last year's numbers, but whatever. $717 billion of revenue. So as you can tell, the growth numbers on this company, especially to be as big as it is already ridiculous and off the charts. As you can see over here, revenue was $28.6 million, an increase of 64% year over year. So obviously this company is growing like crazy. Revenue numbers are ridiculous. Then we come over here and we look at the balance sheet. Currently, they have $483 billion of total cash, and their total debt is $180 billion. That is a really solid balance sheet. They could pay off all their debt right now and still have over $300 billion. And that just leads to one question. Why is Alibaba beaten down so bad? So there's really two main things, and this is Jack Ma. Jack Ma is a co-founder of Alibaba. A couple things. So for about 3 months, he pretty much completely disappeared off the map. No one knew where he was, what he was doing, what was going on. So that caused some issues. So he's missing for like 3 months or whatever. As you can see, why did Alibaba's Jack Ma disappear for 3 months? And you know, you see him, he's out here just rocking out, doing his thing, not worried one bit about Alibaba. And then all of a sudden, you start getting lawsuits. So there's a shareholder lawsuit. Then China started coming after Alibaba for anti-monopoly stuff. And it was just one negative thing after the next, and it just compounded. And next thing you know, Alibaba is sitting almost at $200, which is completely ridiculous. So what I want to say about this stock, it is still a great company regardless of what is going on. There's been a lot of drama, obviously, with the lawsuits and Jack Ma and all that stuff. But a lot of times what happens with a stock, when it starts getting a lot of negative press, it forces a lot of selling pressure and people get scared. People sell, whatever. So then the stock goes down and then more people sell, and it's just a compounded thing. But at the end of the day, long term, you know what wins? fundamentals win every single time. If a company has really solid fundamentals and they're bringing in that money, you already know what it is. They're gonna go up long term. In my opinion, this is a really heavy buy. Alibaba is the biggest e-commerce company based out of China, and these prices are honestly just ridiculous. So if you enjoy, make sure you leave a like on the video, subscribe to the channel. That would really help me out. And I know this is a little bit corny, but I really want to provide value for y'all. So if you have any suggestions or anything that you want me to cover, make sure you leave it in the comment section, and I hope to catch you on the next video. Peace.